Hey, everyone here at the Investing Stuff You Should Know podcast. We have a pretty cool guest with us today, Jeremy Goodrich. He will be talking about a lot of things, but he really has a focus in the commercial real estate, kind of a commercial real estate advisor. He has his own podcast, really his focus in that niche. That this niche or this area of building protection, commercial building protection in particular, is very relevant for myself. Here in Minneapolis, Minnesota, we have an apartment complex. We had some incidents and we had some a whole situation right there that maybe Jeremy and I will talk about a little bit later. But Jeremy, thanks for being with us today here, sir.
Johnny, I'm super excited to be here, excited to talk risk management, insurance, having a great service team for your program and everything else in between. So it's going to be a good conversation. I'm looking forward to it.
Yeah, and that's this area. It's not the most exciting and the sexy topic, but as business owners in the real estate space, whether it's multifamily, industrial, these other, I guess the risk profile goes down depending on what you have in there. If it's just an RV, I guess it's maybe not quite as risk as having a human being live in there. But this is so important. And as you and I were chatting just pre-show a little bit, we had a fire at our newer building, nearly brand new building here in Minneapolis. And then we had another fire-related incident with the sprinkler head. So we had two claims, and our insurance carrier dropped us at the end of the year, barely could get coverage again. And then our premiums went up by three or two, I think by two times, at least two or three, I forget, sorry, but a lot, like really a gut punch.
Yeah.
First, give us a little
on your NOI, right?
Yeah, give us a little bit about where you focus, what's your kind of your philosophy, and we'll start getting into some specifics and other things.
Okay, yeah. I was an elementary school teacher for 13 years before starting an insurance agency. In 2013, I left being a teacher, started an insurance agency with my wife and business partner, and got really focused on real estate right from the beginning. So I didn't know anything about insurance when I started it. I came from being a teacher. And so I started helping first-time home buyers and just helping them with the insurance piece. But I noticed they had questions about everything else too, about what an escrow period is, what the closing is going to entail, how to find a realtor, a lender, all the different folks in the process, what's an inspection as opposed to an appraisal, right? Like all these details. And so I just started going out and finding answers to those questions and posting it on our YouTube channel. And I've just fallen in love with real estate ever since. I've always been a service provider, always from the insurance and risk management perspective. Helping first-time home buyers became helping investors in small residential 1 to 4 family units. And that then became helping multifamily investors, which has now turned into our commercial real estate program. It's a national program. I take care of folks with portfolios as small as 100 doors and as large as thousands of units.
Wow.
And that's across most asset classes. I don't do mobile home parks, but I do self-storage, multifamily, office, retail, flex industrial. And so I work in all of that space and just have enjoyed it the whole time. I love helping people understand a small piece of their story and being a part of everyone's journey. I feel like for every investor that's listening to this show, you should know that your service team is one of the key pieces of what you do, right? Obviously, your property managers, if you have those, are number one. Sitting right below them is probably attorneys and financial advisors and folks in those spaces, certainly your broker relationships, but in the mix is your insurance advisor too. And so I'm just always trying to be a valuable part of the service team while educating people about the risk management piece and about the insurance piece and why it is the way it is, even if sometimes we don't like that that's the fact.
Do you think it's inevitable, Jeremy, that insurance must remain one of those complicated things that only people that like live and breathe in the space can explain? Like your CPA and tax preparer, or CPA and accounting, and some of these other things. Some things just seem to remain in the enigmatic state. Do you feel like insurance is one of those things that you just really, it's not so much like it's unavailable to the common person, but do you feel like only the people that really live in it have it's a must connection?
Yeah, it's interesting because insurance on its base level is really simple, right? None of us listening to this show would be investors if insurance didn't exist. The only people who could invest in property would be people who have enough money to be able to absorb the loss of a $10 million property or a lawsuit that costs you $5 million. And I know I'm not in that boat. I'm not sure if you're in that boat, Johnny, but a lot of listeners
No.
obviously aren't. And so at the foundation, it's really an approach of community financing the biggest risks we take. And so if we look at it that way, it feels really positive, right? Yeah, okay, let's all put in a little bit of money every year. And then when you have a fire at your property, from that pool of money, we're going to throw some of that money out to help you get back on your feet, get back to where you were before without having a financial catastrophe. That's all insurance is, right? But then,
that's amazing to just break it down like that. But go ahead. But then
yeah,
why does it seem so like complex and impenetrable, and the policies, and there's like all this giant document and disclosures and your policy? Why, if it's like simply like you just said, like you just simplified there to a sentence or two, why do I have a 10-page policy page
yeah.
or a document?
So it starts from what I just described, right? But then the pool of money is perceived as one thing. And then someone says, I had this bad thing that happened to me. I want some of that money. And then the people who are responsible for the pool of money, the insurance company, are like, wait a minute, that's not really what we created this pool of money for. We
Yeah.
better create in the agreement that says, oh, that's not included. And so then they add that, right? And then someone else tries to take out of the pool of money for something that wasn't really the meaning of the thing in the first place, a different thing. And so then now there's a new clause, and now there's a new clause. And then over the course of time, lawyers and legal and all the back and forth between folks who want to pull from the pool of money, which there's nothing wrong with wanting to pull from the pool of money. That's what it's there for, as long as
Yes.
you're being honest in your approach to it. But enough people aren't honest in that process that it creates these 10, 20, I think 150 page legal documents with
I was
definitions.
even off then. It's like I said 10 or 20 pages, like you're 10 times that, like 100 or 200 pages.
And if you really look at it from, I'm a nerd who loves to dig into these policies and get into these forums. If you
Yes.
really look at it, it's a truly just a back and forth between an insurance company that's trying to collect premium for a specific thing, and people who, often rightfully so, are just trying to take that money back out because they put some money in.
I think that's you nailed the crux of the issue, so Jeremy, wherein you have essentially two. That's why insurance seemed like a joint agreement of uneasy agreement of tension. So obviously the insurance company is there to be in business, and then of course the operator, the multifamily operator or investor, is there to also be in business. And then this linkage is obviously they have competing interests. I want to sustain this insurance company and have it be a thriving business. Clearly, I can't pay out to the moon, but also if my building is burning down or there's other kind of disasters, I want to have that covered, which is why I have that in the first place. I think you articulated that very well there.
Can I give one example that I think is so imminent right now, especially for
Please.
commercial investors? Roofs are a big claim part, right? And a big part of commercial properties. When you look at your expenses, if you're picking up at a property and looking at your CapEx and what you're going to have to spend, if you've got 100,000 square feet of roof space, you've got millions of dollars in a potential cost associated with replacing roofs. And there's all these folks out there saying, hey, why don't you just file an insurance claim and get a free roof? And so there's this tension between the idea that when a roof gets old, we should just be able to replace it through our insurance policy, and the fact that's not really what insurance is for. Insurance is there for if your roof is damaged by hail or something like that, and if there's a legitimate damage scenario. But if you just have an old roof, that's something you should just have to replace. I've replaced 2 roofs recently that were just old. They just needed to be replaced, right? And so this is an example of there's all this language that's being built into insurance policies, ACV coverage versus replacement cost, things that take lots of explanation to really understand, that are trying to defend insurance companies from people trying to replace their roofs just because they're old. And so that's a really good example of tension. I've got a client who's replaced lots of roofs because they were able to make that work, and that's fine. And don't complain when the insurance costs go up. You know what I mean? Because that's the other side of it.
Give the, I'm going to ask you a direct question here, Jeremy. I see that you have an insurance agency. So but also you have a kind of this, when I'd love you to explain what it is, the advisor role to, like you said, a minimum of $100 and to many thousands. Let folks know perhaps your bias or your perspective here. And maybe you don't have one, but let's just say, just tell people where you're coming from. And so they know as you and I discuss, what your perspective is.
Yeah, I think risk management is at the bottom of all this. Insurance is a tool, right? And risk management is what we're doing. When you do due diligence, when you're picking up a property, if you're picking up a flex industrial, it's 20,000 square feet, 4 buildings that you're considering, you're going to submit an LOI. And then if that's accepted, you get your PSA going, you start doing due diligence. And what are you doing in due diligence? Making sure that you clearly understand the risk that you're taking by investing in this property. Due diligence is something that everyone knows they should do, and it's simply a risk management process. To manage risk, you have to do 3 things. Identify the risks that you have.
Yes.
Understand what that risk is at a deeper level, and decide what you're going to do to manage it. And so due diligence is identifying and understanding so you can decide if you want to manage it, or if there's some red flags and the risk is so high that you just don't want to follow through with the deal. And I
That's
think
awesome, man. Yeah, go ahead.
yeah,
Please, yeah.
if we think about risk management as our decision-making process, I love the movie Top Gun 2 came out recently.
Yeah.
These are both examples of, hey, let's go do this impossible thing with these amazing airplanes to save the world or whatever. And the whole conversation is, how are we going to pull this off? You could say that same thing in a different way. How are we going to manage the risk?
Yes.
And the whole process is about that. So I think that's the perspective I always come from, is I'm a risk manager. I help to advise people about the risks that they're taking and how to mitigate those risks. And with a lot of my larger clients, we create risk management strategies that are similar to your business plan, because that's also going to get us cheaper insurance. But along the way,
If you, so when you just for that, so yeah, you'll present that to the insurance companies and they'll read that, or how does that work? How does that actually quantify into less? Okay.
Yeah. So at the highest levels, when you get into the thousands of doors, full millions of dollars of insurance premium, there are ways to get your premium reduced because you have quantity. Some of those are a master policy, captive insurance. There's a whole bunch of different approaches that we can make. But these companies are taking on big risk, right? They're taking on tens, even hundreds of $1 million of risk. And so they want to understand that you're doing everything you can do. So that risk management strategy, you say, here's how we manage risk. Here's our checklist process. Here's our systems we implement with our property managers. Here's how we go every year and make sure that we're managing the risk in general of tenants and things of that nature. And insurance companies will say, we wouldn't say yes to most investors.
Ah, yes. Yeah.
But because we see that you're managing the risk, we're going to say yes to you. And that's
what
where,
is, what is it? And what would, again, this is maybe too case specific, what would be a reduction in policies when an insurance company would be aware of a good management risk policy or procedure process, like you said, for a portfolio?
Like how much premium would you see go?
Maybe would you say 5 or 10% on your premium?
Yeah, I think when you get into captive, that's a really hard question to answer.
Okay, no, that was, I thought maybe I would be treading there. Like this may be very, very case specific, but I wanted to throw it out there if there was something.
No, I'm helping someone save up to 30% right now because of what they're doing. And then when you talk about captives, not to get too in the weeds, but when you talk about captives, if premium gets paid to the captive and it doesn't get paid out in claims, you get to keep a lot of that money. So we're putting millions of dollars in some cases into a fund that's there to pay out if claims happen. So if you end up paying it all out, then it's gone. And it's very similar to if you just had a normal insurance policy. But if it doesn't pay out, then you keep the money.
Okay. And I don't even know about this, and just because I'm not some master of multifamily, I know some things about some things, but clearly there's way more.
Yeah.
So captive, is that almost like an escrow account where like both sides don't get it, but it's sitting there ready to go? Like you said, maybe it bears interest in some other things you can invest in, but it's sitting there. Is that?
Yeah, it's essentially you create your own insurance company.
Amazing.
And so we could do a whole episode on captives. I love captives. It's one of my favorite approaches, but it's really for anyone listening, unless you're paying $1 million in insurance premium or more, it's not a solution for you.
Sure. So scale, it definitely has to have the scale piece of that. And as as you get larger into portfolios and other things of business, things make sense at the larger scale and they become more interesting. And of course, the downside is more serious or potentially, but also that's why you can have this additional load of accounting and compliance and folks like yourself to guide these things and put these into implement these ideas.
Absolutely. Yeah.
Give us so that's awesome, man. So I'd love to hear, you touched on it a bit, maybe already, but just give us, start from the beginning, what you do with these larger, maybe let's start with probably more people in my circle are at the smaller end of the portfolio. Let's talk to those folks, maybe with 100 door, maybe sub 1,000. Obviously the people in above 1,000 they start in other areas. To us, the 100 to, 500 door person, what does the process look like? How do those conversations go normally?
Absolutely. So I think one of the most important things someone can take from the conversation is that having a good advisor, someone who explains things simply, puts together policies thoughtfully, and has access to a bunch of companies so they can make them compete against each other and bring the price down, is at the heart of it all. I think that in general, for portfolios of that size, we're insuring by location. If you're a multifamily investor and you're purchasing a 50-unit property, usually you're going to put an insurance policy just on that property because you got a separate LC and maybe you have a syndication or whatever it is you're doing. And so we're going to insure that property on its own. And I think some of the things your listeners can do is when you're early in the process, make sure you really have a clear penciled number. I think a lot of people listen to gurus and they say, oh, just put $200 a door for insurance. That's a really big mistake. Insurance tends to be between 5 and 7% of your revenue from a property, right?
Yeah.
And so it's not the biggest expense, but it's a decent number. It's a significant number. And so if you put $200 a door and it's $600 a door, you're talking about a significant swing in the potential of that property. So I guess my first piece of advice is even when you're penciling, make sure you're getting numbers from someone who knows what they're doing and knows what they're talking about. Then as you get into the process, obviously, once you've got that signed PSA is really the waypoint to me, where you say, okay, I really need a hard proposal. Here's what we think the closing date's going to be. Here's who my lender is. Let's rock and roll. Let's get these numbers rolling and take it from there. And then making sure you have, if you've got a good advisor who understands Fannie Freddie compliance and stuff like that, then that person should just make the insurance piece one tiny piece of the conversation, something to check off at the end, and it just gets knocked out.
I love that. The perspective of the team approach, Jeremy. And just like I'm just sharing learnings that I've had is when you should start talking to bankers, and clearly we should all reach out to financial institutions, but early in the process, make them a deep part of the conversation. And I think the philosophy is also in this case, when you really start understanding the fundamentals of the multifamily business or commercial real estate more broadly, that is like someone like yourself is such a key partner versus just slap a number and they're like, oh, all my coaches or my mentors say to put $200 or $300 a door versus a percentage, and then which is obviously going to adjust depending on the area and the asset class. And that person in, like you said, is really kind of like shift your mind, develop that relationship, and then of course the challenge, of course, is finding people like yourself and other people that you really trust that know you're on their side and bring them into close counsel. That's probably the biggest thing, because then like we can all just Google stuff. It's, I don't know what the heck from what, just like a bunch of names and stuff, and it's overwhelming. How would you say people would know that they're working with you, like someone like yourself, which I think you're a trustworthy team and individual? Let's just say you try to find something else out there, and there's lots of people out there, lots of different things going there. How do you know that your insurance advisor or insurance agent is on your side, really like someone that you want to work with? What's some high level tips on that piece?
Absolutely. Great question. I think first it comes back to that, what I said before, that they're able to explain things clearly. If you walk away from a 15-minute conversation with an insurance advisor feeling dumber than you felt before the conversation,
I love that.
This is not the right person for you.
Yeah.
The ability to explain things clearly is not only a skill of communication, but it also proves that someone's not trying to hide something, right? And so I think that's a key. 2, does the person understand the asset class, especially multifamily right now? Insurance is insane for multifamily right now. It's an incredibly hard market. Insurance companies that I've been placing multifamily insurance with for years are saying no to me in a way I've just never seen before.
Seriously?
Yeah. Not only are we seeing significant increases in premium at renewals, but we're seeing companies flat out saying no.
Incredible.
And there's a variety of reasons for that. So if you're going to someone who doesn't know this asset class, there's a high likelihood that they say something at the beginning, and then as you get closer to closing, it starts to fall apart for them. And now you're a week before closing, and suddenly your insurance agent doesn't have a solution for you. And obviously that's not what you want. And then an independent agent is pretty important, because especially in the commercial real estate world, the State Farms and the folks like that can do small commercial, they can do home and auto really well, but they're only one company, so they're not making other companies battle. And mostly really when you get into larger stuff, those captive companies aren't going to be able to, those State Farms and stuff like that aren't going to be able to help you. But so independent would be the other piece. Let us battle, let us make the companies battle. And the last point I would make on this is the choice to go out to 3 or 4 different independent agents and saying, hey, can you quote me this property? I think, especially if we come from construction backgrounds and bidding and all that kind of stuff, this is how things work. You send it out to 3 or 4 people, you get it back from them, and you take whatever you think is the best solution. Here's the problem. Most good brokers like myself have access to very similar insurance companies. So you're not getting some like big, broad, different thing from one broker to another.
Yeah.
Also, if companies see submissions from multiple different agents,
Yep.
companies actually decide they don't want to offer the best for you because they see that you're not committed to the agent. So that's just a red flag for them a little bit. So it's hard when you're first getting started because you're like, well, I don't want to just trust someone that I don't even know.
Which is why, like, the first two things you said are like the sequence of your process is what you just said at the first two things, and then the second thing is, hey, if you want to skip the first two, you're shooting yourself at least in one foot with maybe shopping it to a couple of different agents. And then, of course, obviously with technology and other things, clearly the insurance company, which probably going to be some of the same providers at the back end of that, are going to say, see the address and see the property and see the name. Like, yeah, they're getting shopped. This is getting shopped from a couple of different spots. So they're going to know that like super fast.
Yeah. And I guess the last thing there is, if you do have someone you trust, if you do decide to go to multiple agents, tell the person you trust the most first. Because once a market is blocked, so Liberty Mutual is an example. They do a lot of apartment complexes. I place a lot of coverage with them. If you tell someone else, they're going to block Liberty Mutual. And so when you come to me, I can't use that market anymore. And so even if you trust me, even if you feel like I'm the person who ultimately would be the best advisor and the best team member, if you've told somebody else first, I can't help you. And so it's just some advice on how to play this part of the investing game
for sure,
the best that you can.
As we go to the final section of the show, Jeremy, you and I chatted pre-show about, we're just going to make it personal here. So I have an apartment building, a mid-sized 40 unit here in Minneapolis, Minnesota. We know that the laws here, maybe audience may or may not know, but the landlord tenant laws are definitely in the favor of the tenant. And of course, there was kind of some COVID backlog and some other things. I know it seems like a long time ago, but there's still residual effects to that, at least a year ago. We had a fire in our unit. We had someone broke a sprinkler head out. We had a couple of claims, really large claims that took out multiple units. And eventually our insurance company dropped us here. You and I chatted pre-show, and I know you had some insights, some guidance, and some recommendations. Just when I tell you that story, tell us, start from the beginning and tell us what your recommendations are when those things happen, or when you find yourself in that situation.
Yeah, a couple of things. The first thing is, I hope the insurance company took care of you in the loss situation, because all this other stuff comes after, right? But ultimately, you paid your premium. I'm hoping they took good care of you in those losses and made you whole again through that process. There probably was some back and forth and some figuring it out, and it probably took a long time.
Overall, it was 100% was the best ever, and 0 was a disaster. It was probably sitting in the 75%. So I'll take that.
Yeah, I think that's good. So that's the first thing I would say. The second thing I would say is, brings up the importance of requiring tenants to carry renters insurance and carry renters insurance at probably $300,000 or something like that. Now, I don't know how bad the fire was, and I don't know how bad the water damage was, but I'm assuming that your tenants didn't have renters coverage, because you could have gone. It sounds like both of those were the fault of the tenant. And you could have gone to the tenant's policy and had the bad thing covered through their policy, therefore avoiding the loss on your own policy and avoiding the situation that you ended up on the back end. That's not always the case, but it is a good reason to think about making sure you require renters insurance and why that's important. Does that make sense?
It does. That's tremendously helpful. That's very clear logic there. And we, as any even dumb owners, I'm not saying I'm a good one or a dumb one, but that's required. But also the challenge there, of course, is if they just drop it. And we move through a couple of property management teams, and there's a lot of things falling through the cracks there. So what's the challenge? Just real quick, I don't want to lose your train of thought there. What's your challenge? What's the answer then when people can just simply drop insurance and you wouldn't know, or you don't know?
Yeah. So what we like to do is something called a tenant liability policy. This is a policy that the owner takes out.
Yeah.
And the owner can actually make money off of it. It almost can become a CAM. And so you say we can provide you a policy for $20 a month, or there's a policy we have to protect for XYZ for $20 a month. If you opt out of it, you're saying that you're getting your own renter's insurance, and will require you to show proof of that. Do you want to opt out, or do you want to opt in? Most people will just leave it on there. Even if they have a renter's policy, oftentimes they'll still just pay the $20 or whatever a month. And so you've created a defense mechanism inside your own system. And if you do it right, you're charging $20 a month, and then the insurance company is only charging $10 a month. So you're also making $10 a month off of that exchange.
Yes.
And then if something bad happens, you hit the tenant liability policy first in that scenario. So you've created a barrier between your insurance companies and tenant mistakes. And while doing that, made a significant amount of money. And extra, if you're making an extra $10 per tenant, that can add up to some serious money. So that's something that we do a lot to avoid that. The only other way to do it is to collect renters declarations pages. And I think we all know that's a really big pain.
Yeah. And of course, there's lots of ideas and policies and things out there. And so how do you enforce it? How do you manage it? And somebody's dropping and coming and going and all these different things. Like you'd have to hire somebody just to maintain this thing, make sure all that's properly being followed.
And that's the kind of the beauty of the tenant liability policy is you just say, if you want to opt out of this, then you have to show us the declarations pages. So you make it hard to opt out of. People don't opt out of it. And then you have that barrier created there.
I got you. Okay, awesome. But so, cool. Sorry, that's a sidebar, but you were flowing through your some ideas there when you heard that story.
So then the last thing comes to the frustration that you have right now, right? Which was you had some claims, they got taken care of like they should have. They weren't your fault. You can learn something from them, but that's the scenario. That's why you buy insurance. Yes. And then the insurance company turns around at the end of the year and says, you know what, we're not going to insure you anymore.
Yeah.
So a couple of
like, it's not us, it's you. I was like, oh.
Right. Yeah, exactly. And it creates so much frustration. And I agree with that frustration. When this happens to our clients, which it does happen, it's frustrating. And we're frustrated too. And we help folks solve it like you did. But just to give you a sense from the insurance company standpoint, a lot of the best priced insurance companies are also incredibly picky. They almost want to say no. And you're trying to talk them into saying yes. And then they do say yes. And we've got a price that's decent and we feel good about it. It's $400 a door, $500 a door, whatever it is. But they're ready to turn off the spigot as soon as you give them a reason to do.
Yeah.
And renewals are a time built into the system every year where an insurance company can change the agreement by increasing premium, changing coverage, or they can decide it's just not something they want to do anymore. And they can cancel the insurance policy. So you wouldn't want a business to be forced to do business with you. And so renewals are the time when a business can say, you know what, the relationship isn't working out. We've lost a lot of money on this deal and we're going to pull out. So seeing it from that perspective, I think it at least helps to make more sense. It doesn't make it any better.
For sure.
But then you turn around and you get penalized. And I don't have great answers for that. But you have a couple of claims on your record. You can't get in with a tier 1 company that's going to give you the best options. You're having to go to a tier 2 or a tier 3 company. And the companies that are going to say yes to a risk that has more claims are going to charge more premium for it. Right. They're just saying, hey, you've shown a history of having X amount of money going out. And so for us to take the risk on, we're going to have to get more money coming in. I'm not saying insurance companies are like all good or whatever, but these are just the financial perspectives that they're coming from. And so I don't have great answers for you. And I think when my clients get canceled by a tier 1 company because they had multiple claims, what I do is I go out and find the best next option.
Yeah.
And it's not going to be at the same price. Even if that company wouldn't have canceled, let's say that company that paid those claims would have decided to keep you, you might have had a doubled premium anyway, because they can change the price however they want. So I think that's just the scenario, and it feels crummy, and I don't have a great answer for that. But the goal is just to go out and find the best solution that you can, and then further increase your risk management strategy so that you don't have as many issues, making sure tenants have coverage and renters policies, or you have a tenant liability policy to create a barrier between your policy. These are all the risk management strategies we do to make insurance work a little better.
Absolutely, man. So summing that up, there's not necessarily a great answer because that's just how life, it's like a sequence of unfortunate events, and this is how the business works. And this is the perspectives that are had and that are just the realities of how these things work. So wrapping up the final piece here, Jeremy, what is the best way for folks? I know that you have a podcast and maybe you have a favorite social media platform. How can folks get in touch with you and learn more?
Yes, I talked about having the right ballpark for penciling. And at shineinsurance.com/ballpark, we have something you can do, 9 yes or no questions, get an immediate ballpark for that given piece. So that's a really good thing to just bookmark in your browser, use when
Yeah.
you're penciling so that you get some numbers that are pretty decent. That's at shineinsurance.com/ballpark. That's a great way to find me. LinkedIn is my social media of choice. You can certainly find me there. And the podcast is called Managing Commercial Real Estate Risk. And we talk about managing commercial real estate risk, just like we did in this conversation right here.
That's really good, man. Thank you for joining us. Thank you for being here. Of course, now turning now to the audience. Thank you for listening to another episode of the investing stuff you should know. And this discussion that we just had is really the things that you should know. If you're an investor, an owner, an operator, you need to learn about these things and get in contact with folks like Jeremy and his team to learn, to know, and to grow so you can protect the wealth that you're trying to create for yourself, your family, and those that are closest to you. So until next time, thank you, Jeremy, for being with us, and for the audience here.